So shatter our dreams, Rohit, and tell us what you're seeing. Are the markets going to feel a deflationary impulse from China? What's your work telling you, buddy? Oh, it's funny, huh? Okay, so let's let it rip, buddy. How are you? Welcome back.
I'm doing good. The Indian markets have been ripping away non-stop. So it's been a beautiful run as far as India is concerned. And we continue to have this rip on the back of a lot of bad news or fear. Let's say fear is the better word.
Okay.
And that gives us the feeling that we haven't reached exuberance yet, despite what we might say are a lot of headwinds. But in terms of sentiment,
well, hasn't there been a bit of a pullback in the Indian market with the rest of the globe? Can you share your screen as well? Right now, all I see is your name up there.
Yeah, I'll do that.
So we had about a 5% pullback in S&Ps. Didn't the Nifty have some type of pullback?
Very little. And
very
most
little.
of the pullback has been only in the main indices, So if I actually look at, say, the Nifty, now this is the Nifty daily chart. Okay, yeah. We've seen this small little pullback over 4 to 5 weeks. It looks deep, but it's actually not much. Yeah. What is really happening below the surface is that stocks are continuing to go up. And if we simply move to a mid cap or a small cap index, you'll see what I mean. Now you look at this and it's still making a new all-time high today. Even the small cap indices are doing that. So below the surface, the market is very strong. Okay.
How about the banks? Are they suffering under some fears of what's happening in China and what's happening in the US, or are they insulated, Indian banks, from
so
what's
Indian
happening?
Banks have seen a correction, which is here.
They look ugly.
Index. But it's not because of either China or US, because the Indian banks are mostly exposed only to the Indian business. They don't really have any global exposure. So there's no reason for them to suffer.
It looks like the XLF.
Yeah.
So I mean,
if I go slightly longer term, it won't look like the XLF.
Okay.
Because US banking is under a lot of pressure. If I just look at often look at the Dow Jones Bank Index. Yeah. So if I look at this, it's way down from the highs of 2020. So all you're seen is a recovery from the March bottoms, which I do think is possibly a workable bottom. We probably see US banks do much better in the months ahead eventually. But Indian banks are holding up much more. I mean, they haven't really pulled back this much. Okay,
so you're still bullish. You're bullish everything.
I'm bullish everything. Yes, that's
how
fair.
About the dollar? Was that the end of the dollar rally?
I think it should be the end of the dollar rally. I have taken a parallel, channel around the setup. So this is the dollar index. It's almost breaking the short-term channel, and slightly broader. I have taken a parallel to the bottom. So if I draw a line of the bottoms, it just touched that. And on sentiment, we were at 90% bullish on the daily sentiment index or the DSI at the highs. And so that sort of sets us up for ending what may be a second wave or a B wave. I'm leaving that count open. But my sense is that once we are done here and we see the rollover, we have a long third wave to go. So I'm looking at it going all the way back to these lows eventually, 88, 89 in the coming 6-8 months, maybe.
Okay. Are yields peaking in India like they are here?
Yields in India have actually already peaked months ago. So I'll just quickly move over to that chart. So this is the Indian bond yield down here. They peaked here with a triangular structure, somewhere in March, and from there they started to fall. So we're actually seeing the initial impulse waves. I would say this is wave 1 and wave 2, almost a 61% retracement. So when US yields start dropping again, I think we'll probably go into third wave down and go much lower on Indian yields.
Okay. So go ahead. Before I start asking you in machine gun fashion a bunch of questions, what did you plan to say to us this morning?
Yeah, so I've tried to put together some charts. Let's try and go over them. But one of them that is prominent, I think, one of the things is just to think about this. I think we all know it. And the reason I highlight it, and I did so in my monthly long short report also, is because there's so much narrative, especially globally, that tries to compare what happened in 2000 or what happened in 2008 and try to use that as a context to what might happen right now or what is happening. And what I mean by that is, how will the bond yield, dollar, inflation, or rather recession trade really play out? If there is a recession, bond yields go down, stocks also go down, kind of narrative. And I think in the last time we also spoke, I showed charts of the 1980s to try and debunk that. Because when we are making these comparisons, are we comparing an inflationary period or a deflationary period? And the question you asked me right at the beginning, is it a deflationary bust? And according to me, starting from 2020, the post-COVID rally, we are actually in an inflationary bust, right? So rather, we should not even call it a bust, because equities tend to gain in an inflationary cycle if you can really manage through it. So we are going through periods of inflation. This probably been the first round. I don't know if there'll be a second or a third like you had in the 1940s, but that is a good model to keep in mind. And in that model, every time rates come down, the markets do tend to go up, till there's another inflationary peak.
When I brought up deflation, I was referring to China exporting their deflationary pulse to the world. Do you have any concerns about what's happening in China? They are a gorilla in the world economy.
So if I look at the wave structure of China, so I'll just come to that. I'll just show you a chart of the, why didn't it open? Yeah. Chart of the 1940s inflationary cycles. If people have not seen it, you had multiple spikes, one from here to here. You had another spike from here to here. So it came back to zero. You had another spike. It came all the way back to zero. You had another spike. What is important to understand is, did these periods really result in a stock market crash and a recession? The answer is a mild recession or some kind of a recession, yes. A stock market crash, no, but a consolidation. So if I actually go back now and look at this, this is like the mid 1940s, then it's again late 40s, and then you have mid 50s, right? So what did equities in general end up doing during that entire time period? So I'm just going to open the chart of the Dow, as that has most of the history. Maybe I'll take a white chart so that shows much more clearly. Yeah. So what we are really referring to is this period all the way back. And we are talking about this 1940s, mid 1940s, late 1940s. We're talking about somewhere around a bit of it here and bit of it here. Each of these inflationary, spikes led to a correction. And once the inflationary period was over, you had another boom, had another correction, you had another boom, and you had another correction. This was also a period coming out from the bottom of World War II, and the debt to GDP ratio would have been very high. And it continued to unwind as you inflated the equity, inflated the economy. So are we really doing something similar, which is what MMT and everything was, all about? So why aren't we making this as our comparison instead of 2000 and 2008, which were actually deflationary periods? So that is my whole argument. And so I sense that once we end this inflationary spiral, we're actually going to see a bond and equity market rally simultaneously, rather than bonds going up and equities going down, which has become the general narrative across hedge funds. And
I don't know why, because that certainly didn't work in 2022. In fact, the bonds led the market lower. So will the bonds just rally in sympathy with the market, or will they lead the market higher?
Yeah, so far equities are leading because they are higher than the bond market.
Right.
The bond market is somewhere in the fifth. I have charts of that, but since so before I go to that chart, I'll just jump to China. Since that's what you just mentioned, and I'll take the China A50 index. Okay, so for that, I will just go to my Asia. See, on the China A50 index or on the Hang Seng, which is the Hong Kong index, what we see is a very, very clear 5-wave advance from the bottom last year, where the post-COVID lockdown rally started in China.
Right.
This is very important from an Elliott wave perspective, because when you see a 5-wave advance and then I mark that as wave 1, what you expect psychologically is that during wave 2, sentiment, and this is as per what Elliott wave principle mentions on psychology, sentiment in wave 2 is often as bad or worse than it was at the bottom. And that is exactly what you're seeing right now. People are talking of the end of China. And when my brother in the US called me up, said, I'm hearing people saying that, it's over. I'm saying, good, then buy Chinese stocks. Because we are at the end of wave 2. It may not yet look like that, but the wave structure suggests that a third wave will come, and that will sort of surprise everybody on the upside. So I don't see China going into a deflationary bust. I think they're just getting started. They're waiting. In fact, they're doing something which the US didn't do. They're not overstimulating. So in that sense, they're not allowing the inflation problem to spiral out of control. In fact, in India also, we managed to stimulate less, and therefore our inflation rates are actually much lower than what we've seen around the world. This is a chart of the inflation data for India.
So that India and China doesn't need the bazookas that Western economies have used.
I mean, we need some of it, and we are doing some of it. For example, India expanded its capex, government spending on capital goods, by 30% in its annual budget for 2023-24, which is sort of been supporting the markets this year, because a lot of demand got created. But they don't have an inflation problem to worry about while they're doing that expenditure. So that is the advantage. So China also has the advantage. Yeah.
What about food prices there, Rohit, in India?
Food prices in India have spiked right now, but that's a seasonal trend, because every monsoon, which is the rainy season in India, is pretty heavy. So during the rainy season, you don't really get new produce. Every year there's a spike in food prices. So it's completely normal and it goes away. So it tends to be seasonal.
Okay, because it's not seasonal here.
That's right.
Okay, so I'm wondering how it could be seasonal there. It's the same food.
Yeah, but India Indian prices for food don't really correlate with the rest of the world. So it has its
Why? Because they produce all their own and keep it and don't export it?
Yes. There are limitations on how much they can export. There are quotas. You can only export so much. Like right now, we've banned rice exports last month. They're also talking about limiting sugar exports recently. So there are always these control factors in terms of how much you can export or how much. And sometimes they will even allow imports when prices go up a lot. They just open up imports and then prices don't go up. So
you have even a more centrally planned government than the US. I mean, no, really, I know that you've probably thought about it, because you've been in the markets for a while before central planning.
Food is a very politically sensitive area in India. So we are not able to exclude it and say, oh, well, we don't really bother about food and energy prices. In India, it's sensitive. If food and energy prices remain elevated, you lose the next election. So it's something you have to worry about.
Okay. You have a view on oil? Probably higher?
Yes, I think oil is done. Oil does start moving higher. So if I just move to the oil chart. And I like to use Brent. So very long, complex correction. Again, this is a very beautiful chart, because it's a perfect 5 waves up from 2020 to 2022. Okay, so we call that a long-term first wave. You had a long consolidation in the second wave, back to the previous fourth almost. And so I think this is now the first minor one, minor two happening. We should develop a third at some point of time. I don't mind if it spends more time in wave 2. The more time it takes to do this, the less of an inflationary problem. But we will eventually go higher. We should cross $100 and be above that eventually.
Okay, here's an exception to your rule. Sentiment is not as negative crude here in 2 as it was in 1 at the bottom, because we had negative prices.
Yeah, we had
So
negative
there was a
prices.
lot more. There are a lot of energy bulls talking $100 and stuff. They weren't doing that at the bottom of 1.
Yeah.
So see, there's exceptions to everything, isn't there? All the time.
Of course. Of course.
All the time. Okay, so you like crude, and I would say that you're probably bullish everything but the dollar.
Yes, that is correct. The dollar is going to be in a bear market, which sort of reflates every asset class, commodities, currencies, commodities, equities, which sort of puts most currencies versus the dollar into a strengthening mode.
Okay. And
we see that more clearly in some versus the others.
Okay. What else is important to you at this stage going into, the summer trading season? We don't have the equinox for another 3 weeks.
Yeah, so this is another interesting chart. This is a ratio of US equities to Indian equities. So specifically tells us when you have a period of outperformance of India or emerging markets versus the US, India in specific, because of the ratio of the Sensex to the Dow.
Yeah.
So the Sensex outperformed the Dow during 2002 to 2008. Again, this was a dollar bear market. So that's important to understand that this was a dollar bear market. And if we're getting another one, we're already seeing outperformance of the Sensex relative to the Dow since 2020. I do think this trend continues. So therefore, on a relative basis, you would probably want to be in India or emerging markets compared to the US, but US markets are also appearing to do well.
Is there a good ETF for India that people trade here in the States that you know of? I know there's EM for emerging markets.
Yeah, EM is non-Indian. I mean, there are, but I haven't looked at it.
Okay.
Yeah.
All right. So do you favor India over some of the other emerging markets as the best pick?
Yeah. This is another interesting outlook. This is the Sensex relative to inflation. And the idea of this is to tell us two things. One is that the probably deflationary period or corrective period or long consolidation is over. Okay, so I'm sort of saying that possibly winter coming to an end for the Indian market and starting a completely new phase where now equities are outperforming relative to inflation. So it makes a very clear bet that, well, if you have an inflation problem, you need to be in equities. That's the bet. It's not anti-equity.
Okay. Would gold and silver equities also be a place to be? Miners?
I would hope so, though the last decade has not been very rewarding to the equities compared to gold. I mean, gold prices have gone from $1,050 to almost $2,000, but we haven't really seen gold equities do that well, which is the only setback. But in general, you do expect gold and silver equities to do well along with precious metals. My view on precious metals, though, does remain positive, of course. So yes, some exposure, but whenever Indian equities tend to do very well, I do prefer to own the equities domestically than to expose myself to. So during this period when gold was picking up, I was actually interested in buying gold and silver miners. But right now, I'm more interested in owning Indian equities directly, which does include Indian metal companies. So there are miners in the copper, aluminium, and other space which are consumed both in industrial and other uses. So those are ones where I'm actually taking interest. Is the metal producers in India.
Okay. Tom is asking for your look on S&Ps.
Yeah, so I can quickly go there. Where is it gone? Yeah. This is my count for the S&P so far after it completed a complex correction in October. We've taken the first, second, and we're in the third wave. The recent correction is only a fourth within that third. So we have a fifth of third left, which should sort of get us towards 47.50, 48.50 in the coming 1 to 2 months. And then I'll look out for whether we can pause somewhere in this range, maybe near closer to the top end of the channel. Will we go through a longer pause in like a larger fourth wave is something that we look out for. But it may not be the end of the move.
Okay. And you want to, I guess, there's been some huge moves, outsized moves in Bitcoin. Is that correction to the downside over?
I think so. What we have sort of witnessed from the bottom of 23 is the first impulse. I've marked this as wave one.
Okay.
This first impulse so far has retraced 38% and almost close to the previous bottom that it made earlier. So I think we sort of got a double bottom here. And we should start off into a third wave with the dollar fall. And Bitcoin, of course, inversely correlates with the dollar as well. The next hurdle, therefore, should be closer to 48,200, which is both a 61% retracement and this previous swing high. Both of them would coincide close to 48,200. So that's going to be the next level. The trend line of the highs, of course, is way above, something to think about as to whether we can eventually get to that level if we do develop a full-sized impulse on the way up.
Okay. You want to show your gold and silver? I saw it before you pulled this up, and we'll wrap with that. Great presentation, by the way. Okay, so 5 is up at 3,000.
That's right. That's
okay.
Right. Five takes us to somewhere around 3,000, unless 5 extends, which we can't see as of now. But yeah, that's the minimum goal to look out for.
Silver targets.
Silver looking at going back to $50 in the third wave.
Okay. All right, and your website so that people can keep up with you, and especially people that want to follow India.
Yeah, so we do have two things going. One is, of course, you directly come to indiacharts.com, where I publish my work daily. I write a strategy note every month. We do a lot of videos to keep people up to date.
You need a shave, man. You see that? You need a shave before you look into your telescope. Anyway, anyway, cute. All right, so go ahead.
So of course, with a specific focus on Indian markets, and do write about a lot of the global equities, gold, silver, etc. Based on Elliott wave analysis, sentiment, and momentum. That's the combination. And an outlook on macro, again with the help of charts, so bond yields and so on. We also have recently launched this software that people should try out. It's called Strike. People can find it on web.strike.money. Again, for Indian markets, all kinds of data, sentiment, positioning, what is the futures positioning, what is the, how prices are doing, fundamental data. So it's sort of a data analytics platform that people can use to study charts, study data points. For example, how many stocks are above the 200-day moving average within the Nifty 500 index, and you can quickly plot something like this for Indian equities and look at them. So this is something I would urge people to try out.
Okay, and I could say that I look forward to Rohit's work. A lot of people could be right, but I've seen Rohit change his mind, and actually is very open to when he's been wrong and had to reverse and change his mind. So that, to me, that transparency shows integrity and character. A lot of people are revisionists, but you know what? We're all wrong sometimes. So check Rohit out, buddy. I'll get a hold of you later on Twitter. Always appreciate your giving nature to come here and share your views, even though they're polar opposite to mine. Right. And you've been more right than me. So anyway, thank you so much, Rohit. Appreciate it.
It's been a pleasure. Thank you.
All right, Joe is thanking you. People are thanking you, and good hunting in the fall. I'll talk to you later in the fall, early winter.
Surely.
Okay, Rohit Srivastava. And thank you very much, buddy. Have a good day. And everyone, you could join the team on the Morning Edge in 19 minutes. And have a good day, everyone. See you tomorrow. And don't just count your pit. Thank you, Sinatra. Count your blessings. Adios. Thanks again, Rohit.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.